Hey, friends, Next Levelers, Bob Gibbons here, ready for another great show, and I'm excited. This is called the Next Level Show, by the way, if you didn't know that whenever you tuned in or agreed to be a guest. But today's guests, and we got two guests. One, you may remember from way, way, way back in 2015, Casey Kronbach.
4 years.
40 years?
4 years,
4
right?
years.
40, yeah.
Yeah, 40 years. Me on the radio for 40 years, nobody wants that. So Casey was with us almost 4 years ago, I guess it was, and had a great interview. In fact, I got to tell you that to this day, that is still one of my most fun interviews.
Oh,
and so thank you for that.
Well, thank you.
And in fact, we've had listeners tell us that. My wife says that as well.
She emailed that to me, actually.
She did she?
She did.
All right. Well, stop emailing my wife. And his partner Brock Robertson, and they now have a new company called MoxieBridge. What a weird name, MoxieBridge. We got to talk about what that's all about. And you can find them at MoxieBridge.com. Moxie, M-O-X-I-E, Bridge. I hope you can handle that one. .com. Guys, thanks for being on the show.
Yeah, thanks for having us. Yeah, appreciate it.
So what the heck is MoxieBridge?
Well, I mean, there's a lot to that question, obviously. I think that it makes sense to kind of back up for a second and talk about, where I was, the transition, kind of how Brock and I hooked up together. And, I was a co-founder of NightVest Capital / Management. We started that in 2008. Had a great run, bought a bunch of apartments. I mean, a bunch of apartments.
Yeah, like 30,000 of them.
30,000 units.
That's more than a bunch.
Yeah. $3 billion of real estate.
That's a plethora.
Yeah. It's a lot. All over Texas, Oklahoma, Arizona, and great run. Wonderful people over there. Love them like family. About a year and a half ago, I kind of determined that I wanted to try something different. We started a company as to do real estate projects, and then it turned into a 400, 500 employee behemoth, and it just became more of running a business as opposed to doing real estate transactions.
Because you were managing the properties.
We were managing the properties.
You weren't a pure investor only. You were
correct.
Yeah, so that takes a lot of people.
It took a lot of effort, and it was fun, and I loved it, and but I wanted to get back more into the daily deal side, right? Where you buy a real estate deal, you put it together, you make it happen, and just more the entrepreneurial versus institutional mindset, right? So I decided to leave the company that I co-founded and wanted to try something different. And so I wanted to help other people achieve the goals that they were trying to achieve. And so my modus operandi, right? Is that right? Was to go out and help facilitate other people's desire to be successful in real estate investing, right? And so went out, kind of started networking, talking to people. Brock and I actually kind of knew each other from afar, right? I mean, we go to church together. We have a lot of mutual friends. At the same time, I'll let him give his background, but at the same time, he was also interested in starting his deal. And so, we formed MoxieBridge. In a nutshell, and I'll let Brock finish this up, but in a nutshell, it's a real estate incubation concept. Fair enough?
Fair enough.
And you can explain what that means, Brock?
Yeah, I can certainly try.
Take a run at it.
Like Casey said, different backgrounds. Casey was on the operations side, the property management side, and really touching and feeling the property every day. I was more an equity investor for a large family office that became a fund. And so I had a little bit of experience on the incubation side, watching companies grow from two guys like NightVest did to a big operation. And so my background a little bit different. I've always been on the capital side, never on the property side. And so it was a very good natural fit for what Casey wanted to do. And I always joked that Casey had a lot of resources, wanted to work less hard. I didn't have resources, and I was willing to work hard. Yeah. And so it was a match made in heaven. And so what we're trying to do is replicate the success that David and Casey had at NightVest for someone else that has a really good idea, is very passionate about that idea, and wants to go be an entrepreneur, doesn't have the same resources and track record to make it happen.
Yeah.
So MoxieBridge, we come behind those guys or gals with great ideas, and we give them the resources that they need to be successful.
Okay, so when you say you were on the capital side, that just means you were raising the money. You weren't necessarily finding the properties.
Right. So what capital side, I worked for a family office for the last 4 years. There was a high net worth family here in Dallas, a lot of oil and gas resources, and we helped them diversify into real estate. And so my role was more of underwriting other people's investments and placing the family and other investors' capital into those investments.
Yeah.
Whereas Casey and David were at NightVest were finding the investments themselves, and I was more of the investor that they would go to.
So had you invested in some of their deals?
We hadn't, and oddly enough, when we can give that story too, but when I heard Casey and David were, going different ways after all the success that they had at NightVest, I called both of them and I said, "Hey, David, I'd love to sit down for lunch with you and hear if we could be an investor in your projects. And Casey, I'd love to sit down with you and hear what you have to do."
So basically, you made the right choice.
Well, I enjoyed both lunches, but one of the lunches came with an offer to start a company, and the other did not. So, yeah, we're here now.
Yeah.
Excellent.
And so that was in April of 2018, something like that. Fast forward, so our goal is to again incubate other people that are trying to do real estate. So we've now closed our 5th deal yesterday.
Wow, congrats.
Yep, thank you. So it was an industrial deal. We've closed a couple office deals. We've closed a townhome development deal in kind of the Lakewood, East Dallas area. And it's all with partners that are very talented. They just need kind of the rocket fuel behind them to make it happen. Meaning balance sheet, meaning LP investment support, meaning track record, all the stuff that, you need to get a deal across the finish line.
Which is mostly money.
I would say
to be real, it's mostly money and how to manage that money and how to report back to the investors.
Well, and to be, so I've spent 10 years building a track record where people, we've had a lot of investors and had a lot of investors, and people trust that it's very simple. When you go into a limited partner position, basically you want to make sure that no one's going to steal your money, that, the people that you're investing with will call you back. That if the deal goes bad, they're still going to keep working it, right? So I have proven that I will do that, and that creates a lot of credibility for these folks that we're partnering up with.
Mm-hmm. So do you find a lot of the investors that you had previously at NightVest are also coming over and investing with you at MoxieBridge?
Yeah.
And I think existing relationships that Casey had from the investment side, plus some new relationships, and that's kind of where his investor base and the investor base that I was a part of, that we can kind of use both of those and find new investors and get deals done from the LP standpoint. I will say real quick, capital is the most important part of a deal. You can have a great idea, no capital, and there is no deal.
Right.
I do think that one thing that Casey offers our partners is, it's cheesy, but Moxie. You don't know if your idea or your project is really a good idea oftentimes until someone tells you it is a great idea, and you're not worried about your project, you're worried about the money, and I can take care of the money, go do your project. Yeah. And I think that's something that our team offers sponsors that have really good projects that without us may not get done because they don't have the Moxie or the confidence in themselves that it takes to get it across the finish line.
Or the relationships with where that money is.
Exactly.
And that's always a big deal. I've been in the real estate business 35 years, and for 20 years I was on the landlord side. I worked for investors that were buying a lot of buildings, and mainly office buildings, but on a national basis. And then now I'm strictly a tenant user agent. So I only represent companies and nonprofits that are using office and warehouse buildings. So I don't do anything on the landlord side any longer because that creates conflicts of interest. But I know some of the guys, some of the partners, the sponsors that you guys are working with. I know one of the projects you did up in Plano, and I'm so excited about that one because I've had tenants in that building, and that building was a dog. Yeah. I mean, it shouldn't have been a dog, but it was. And I actually had stopped bringing tenants to that building. Even if they said, "Look, I want to look at that building," I'd say, "No, you don't. You think you want to look at that building because you're driving by it on Central Expressway, but if you go into that building, trust me, you don't want to be in that building." And the landlord wasn't keeping the place clean. They weren't changing the carpet. The carpet was terrible. I mean, you guys know what I'm talking about. But for our listeners, it was a diamond that had been dumped in the mud for a long time.
Yeah.
So I had actually moved clients out of that building.
Stop it.
And
Don't do that again.
well, I won't do
Bring
that.
them back.
I don't need to anymore. I don't need to anymore. But anyway, so when you guys bought it, I was real excited. And of course, the guys at Paladin Partners that are your partners, I understand, in that project. So they sourced the deal, and you guys came to them with the ability to actually close it.
Yeah. So that's a perfect kind of I guess business plan for what we're trying to do is, the Paladin guys source the deal off market. They are managing and they're leasing it. It's their deal, right? And we just came behind them and raised the money and are providing the asset management, the investor relation reporting and support. And it's a great partnership in that situation.
Yeah.
I mean, honestly, all we're trying to do, there's a couple things we're trying to do. Number one, we're trying to buy assets that are undervalued, that have upside, that we can put capital into, increase the income stream on it, and sell it and make our investors money. Okay, that's kind of one thing we're doing. The other thing we're doing is we are enjoying, and I'll speak for both of us, we are enjoying watching other people create value and wealth for their families and their organizations that they couldn't do without us.
Yeah.
And so it's a really nice partnership.
Is that because they have no other options?
I don't know. I think we opened the door for them. I think.
I think some of it was the confidence in the Moxie that we were talking about. I think some of it is groups. There's not a ton of groups that do what we do, that say, I'll come in and invest with you, and I'll let you share in the ownership of this investment. So the Paladin guys specifically, Ben Appleby and his team, they had done this exact thing, taking a building that they knew could be better than it was and improved it, but for someone else.
Yeah.
And so we came in and said, a good partnership, a friend told me one time, is 1 + 1 is equal to 3. And what we do there is we tell the Paladin guys, you focus on what you know, and that is leasing and managing office buildings. We'll focus on what we know in terms of raising capital and sourcing debt, and let's take this partnership to the next level.
Got it. We're going to have to take a break. We'll be right back after these messages. We are back, and we're talking to Brock Robertson and Casey Kronbach of MoxieBridge. You find them online at MoxieBridge.com, and Moxie is MOXIE. So let's talk about the name. So you've referred, Brock, a couple of times to the term Moxie and just having Moxie as a character trait or a way of doing business or seeing the world. So obviously that's part of the name. So what's the bridge thing?
Casey came up with it with his wonderful wife. And
well, yeah, we were at dinner. It's honestly, it's because we could get MoxieBridge.com. That honestly, I hate the .net or the dot whatever. I think that's just terrible.
It's got to be .com or nothing.
Yeah, but it worked out well.
Yeah,
I mean,
and I believe the subconscious behind it is, I have alluded to Moxie multiple times, and a bridge gives the sturdy foundational way of getting from point A to point B.
Yeah.
And a lot of what we do is take groups and sponsors like Paladin, we mentioned previously, from where they're at and where they want to go, just like a bridge does. And so, Black Moxie doesn't sound as good as MoxieBridge, and everybody's already using Stream and Stone and other words. And so Casey and Larissa came up with a wonderful company name. And I think at first I was kind of like, what is a MoxieBridge? And I think people are starting to use it in it's almost its own moniker, right? So what are the Moxie guys up to? What is Moxie looking at today? And it's taken on a life of its own. It got a great branding team behind us that's helping us further our message. But
Dodd Creative?
Yeah, Dodd Creative Group. But yeah, it's fun. And I think it kind of embodies what Casey is all about, and what I'm all about as well, is just let's have fun. Work doesn't have to be stressful. Let's put some Moxie behind folks and get where we want to go, but have fun doing it.
Well, it also kind of paints the picture in my mind of, hey, we're willing to do things that other people aren't, or we're capable of doing things that other people aren't.
Right.
And just the whole Moxie, I mean, when you say somebody has Moxie, you don't hear that a lot these days, but everybody seems to know what that means. And it comes with a certain degree of, I'm sort of that person you're referring to is a sort of a maverick, but is able to deliver on what it is that he can claim. Like, I had a friend in college. This guy was the most arrogant, boastful person I've ever met in my life, but dang it, he could back it up. He could do everything he claimed he could do. It was really annoying.
Yeah. Hate those guys.
Yeah.
But anyway, I guess my point is I like the name, and I think it's kind of cool that it's not just sort of your typical capital partners or whatever. Everybody's always trying to sound like they're so rock solid, but come on, let's be real.
Yeah, I mean, I hesitate to say our industry is stuffy because it's not, right? I mean, it's sophisticated, it's financial, it's intellectual, all this stuff. But I mean, things are changing, and the next wave of real estate entrepreneurs are different. I mean, a 30-year-old who's trying to start their path now is different than a 50-year-old that's been doing it the same way for 20 years. They're just, it's a change in demographics. I mean, people want to have that moxie. They want to go out and, make it happen. And, and so we just want to be the bridge to that, to their success.
So one thing that you mentioned before the break is you said not a lot of people do what we do, but I'd like to push back on that a little bit more to understand why you say that, because there's a ton of companies that provide capital. I mean, you came from the family office area, Brock. I mean, I have a friend who works in a family office, and he does lots of deals providing the money to the developers or
that's
the
what
investors.
They do. They provide the money. They don't provide. So one thing that we have as a unique advantage is I've done it. I've gone from 2 people in a truck to 400 something people with a big corporate office. We've done it. We've operated. We are able to come in and not just be an equity provider, but also be, a mentor type situation, right? And another thing is, we don't just provide LP equity, right? I mean, we don't charge fees on that money. Like a lot of times groups like us, they'll find a group that's trying to buy a retail strip center or something like that, and they'll go raise the money and they'll charge all these big fees to their investors. I mean, we don't do that. We partner with the people that are doing the deal. And so we are on their team. I mean, it is a partnership. It is a long-term deal. And we bring in our investors, no fees. So
you're all totally backloaded?
Yeah. Well, I mean, there are some fees, right? But a typical fee for a deal, right? I mean, if you go, I know that when I would go do a deal as a sponsor myself, you have the asset management, you have those real costs, right? I mean, you have to do that, and those things still exist. But we are on the GP side. We are not a third-party person. We are in the deal. We are reporting monthly. We are asset managed. We are actively involved on the operations side.
Yeah. And I've been an asset manager for a long time. That last company I worked for, where we were buying lots of buildings around the country, we had 80 office buildings, and I was an asset manager. So I know what you're talking about.
It's a lot of work.
The reporting, and you have some investors that have a whole different level of need for information than others, and there's all kinds of stuff that goes with that. So it almost sounds like your distinction is the difference between, and this is going to sound harsher than I mean it to be, but dumb money versus smart money. So dumb money is basically, here's the money, don't lose it, give me my return, but you're not going to hear from me again. I'm basically just here to receive information when you want to give it to me, whereas you're more involved in actually providing advice, guidance, information in both directions.
Whatever this is worth, I spent 10 years busting my rear end to create a 33% net IRR return to our investors. Okay.
Wow.
I am not going to let that slip. I just won't. And so if somebody wants to come work with us on the sponsorship side and wants to buy a building, they're going to have to accept the fact that we're going to have oversight. I mean, we just will. I'm not going to, Brock and I will not allow someone to not return a phone call, not, to steal money, or we're not going to do that. It's just not going to happen. And if the sponsor that wants to buy the real estate that comes to us doesn't want us in their shorts like that, then that's fine. I mean, that's just not the typical profile of a Moxie we're looking for.
Yeah. No, that makes sense.
I think there's 2 things to further the difference between us and other capital providers. Like Casey said, he's done it. So it's almost like the NFL head coach that played in the league for 20 years. He's got a different level of interest from his players because he's been in the trenches. He's been there before. He knows what it takes. More credibility. And not to say there's not – Bill Belichick didn't play in the league, I don't believe, and he's one of the best coaches of all time. So you can be really good without being an operator that has that track record, but I think it helps us. Additionally, what we do is we get our economics from our partners. not from our investors. So what Casey was saying is if a typical LP investor invests $10 million in a deal, they may charge an upfront fee that their investors pay to invest their money.
Yeah.
If we're getting compensated, it's on the back end via a promote from adding the value we said we're going to add, or a classic acquisition fee that the project level pays.
Yeah.
So I'm never going to have someone invest $10 million where right away it's only worth $8 because of our fee structure.
And when you use the term promote, that basically just means that you're sharing in the upside. So if you buy something for $10 million, you sell it for 15, the $5 million gets split. A portion of that goes to the sponsors, the people that put the deal together, and that's called a promote or a promotion fee or whatever.
Yeah, or profits interest or whatever you want to call it.
Yeah. So it reminds me, talking about the smart money, dumb money, my son is doing a startup, technology startup, and in fact they're currently, he and his partner, in Y Combinator, which is one of these incubators down in Silicon Valley in California. It's an amazing deal. I mean, there's like 11,000 applications and 180 companies get in, so it's a huge deal. And they did not get in the first time they tried, of course, and now they're in, so it's pretty a huge thing. But my point in this is that when you talk to them about, or to anybody trying to raise money, angel money particularly, they don't want just your money, because I can give him some money, but what good is that other than just money? I can't give him advice and relationships and connections and all that kind of stuff. Well, they wanted some smart money, and of course, they can get that from people that have been there and done that before, that have relationships, and that were in Angel List, for example, is a way for people to invest with smart investors. And so it sounds like a similar thing almost, but just a different application.
And I think Paul Graham started Y Combinator.
He did.
And the amount of companies that have come out of that, I think not only, like you're saying, it was the mentorship that they got and the rigorous schedule they go through. Now, we don't put our sponsors through a rigorous schedule, but I do think that if you look at the classic GP investor that would help someone start up in real estate in Dallas-Fort Worth, it probably looks like a family office, and mostly they're just giving money.
Yeah.
I think the group that I worked for, Expedition Capital, one of our partners was an operator that had been there and done that. And I think that really helped our partners in my prior firm achieve success. And so I have no doubt that Casey's track record is getting the ear of not only investors, but our partners. And I think that's why we have to turn people away more than we have to go seek people right now, because they want to learn from someone who's been there and done it.
So you have sponsors that are beating down your doors, wanting you to invest with them?
Yeah. There's no way of saying that without sounding like I have too much Moxie. But we do have a lot of opportunities to look at really interesting deals and with interesting sponsors. And sometimes we have to say no when we'd like to say yes, just because we are still a 4-man team. And there's just only so many hours in the day and deals that we can do at one time.
Yeah. So whenever somebody brings a deal to you, what's your first step in deciding whether or not you want to do that deal?
I'll go first. First step is it's not about the deal. I've learned it's not about the deal. The deal obviously has to make sense, but it's about the person that's behind the deal. I mean, do they have high integrity? Do they have character? Will they show up when they're supposed to show up? Again, I said this before, but do they return your phone call? And that sounds simple, right? But that is 80% of it. I mean, we can underwrite a deal financially pretty quickly, but it's like, is that person somebody you want to, go to the beach with in Playa? Is that somebody that you would trust with your family? Like, would they watch your kids for the weekend? Like that kind of level of interception with them. That to me is number one.
Have you had a successful career selling to businesses? Maybe tired of having your income limited by arbitrary compensation plans that penalize you for selling more. If so, you should consider tenant representation, a specialty within commercial real estate. At Riata Commercial Realty, Inc., we represent companies and nonprofits that occupy office buildings and warehouses. There is no limit on income, and the more you produce, the higher percentage you keep. If selling houses at night and on weekends sounds good to you, don't call us. But if you want to work business hours, have unlimited income, and leverage the relationships you already have, we want to talk to you. Please visit us at texastenantrep.com. That's Texas, Texas, tenant, TENANT, rep, REP.com.
All right, we are back talking to Casey Kronbach and Brock Robertson of MoxieBridge. Check them out online, MoxieBridge.com. So just before the break, we were talking about what happens when somebody brings a deal to you. And Casey, you were saying it's, your first level of investigation is not about the deal, but it's about the person behind the deal.
Absolutely.
And so you're looking for integrity and track record, and just do the personalities mix? Is this somebody you want to hang out with?
Yeah, exactly. And I have to segue real quick, Bob, and just say that you definitely define the reason you have a face for radio.
Why? Thank
I'm just
you.
kidding. No. I'm joking. I'm joking. You should be on TV. Yeah. No. I think that again, deals go great, deals go bad. You have problems going through project. Things happen, right? And it's about the integrity behind it and whether or not that person is going to be there to, even if they're not making any money, right? I mean, we make money when the deal goes really, really well. And we should. And we don't make money when the deal goes bad. But I promise you, if we're not making money, we're still going to be on the phone trying to fix it, right?
Yeah,
absolutely.
Yeah.
So underwriting the person, the character,
it's number one,
et cetera, all that's
right.
number one. So what else goes into your decision?
Well, taking whatever the sponsor or potential partner sends us and putting it into our own underwriting, going and touching and feeling. That's a beautiful thing about real estate is you can go see the office building. You can go feel the industrial space. I mean, you can go touch and feel. So we do all of that. And then, we have a certain level of return that we want to see on each deal. So some deals right now are just too tightly priced and the return's not there. And so we can say no quickly. Some deals warrant further investigation. We're under contract on a out-of-state multifamily deal in Alabama, and we did a great level of due diligence on that property and went and saw the site multiple times and got comfortable with the market, but only after what Casey said, only after we knew who the sponsor was. We knew how he treated his wife and kids. We knew what his references were from his prior companies. So I do think we lead with the human element, and then once that checks the box, we can get into the weeds.
So then you go check out the property, you crunch the numbers.
Right, and we want partners that like to be partners. And there are a lot of people seeking capital that want to have you give them money.
Yeah.
We want people that when everybody wins, they're excited that they won and that we won, not that they wish they hadn't given as much upside to MoxieBridge.
Yeah.
And I don't mean that anyway, but we want to be partners with people that were on team sports as a kid, whether it's golf or tennis or whether it's football or band or debate. People that know how to play on a team and share in the wins and the losses. Those are the type of partners we want.
Yeah.
So a lot of what we do is the human side before it is the deal level side.
So you're clearly, as far as investment criteria, you're obviously not just worried about Texas. You're going beyond Texas, so national, I assume?
Yeah. Our thing is we don't want to do one deal with one person, Mm-hmm. I mean, we want a programmatic approach where we truly partner up and we say, hey, we're going to buy industrial deals in Texas or whatever it is, right? And we're going to go buy 50 of them.
Yeah.
And we're going to be partners for the next 15 years, and it's going to be fun.
So do you have a let's say you want to do 50 industrial deals with somebody. Are you doing that with one sponsor, and you kind of are agreeing to sponsor exclusivity, or are you saying, hey, we're just accept all comers and let's just see what happens?
Yeah, again, it goes back to being a good partner. And so that will evolve over time as to what that means. But right now, it would be very hard to buy office buildings in Dallas with multiple partners and be a good partner to who we've already bought deals with. Yeah. Never say never. There's unique situations, but we always want to treat people like we want to be treated. So there's going to be markets where you say, okay, we're going to buy industrial in Texas. Well, if we meet someone on the West Coast and they want to buy a bunch of industrial, and there's great overlap in terms of friend groups, and we understand who the person is, and they're going to stick to California, then maybe we can have multiple partners. So that will be something we figure out over time. But we always want partners to know that we've got their back, and sometimes that means saying no to other good deals with other partners.
So it's a conflict of interest thing. It sounds like, as much as anything, that if you're doing your deals with Paladin on office deals here in Dallas, you're not going to be doing other office deals with other partners in Dallas, probably because they're going to potentially conflict.
We wouldn't want our office partner to do deals with other people, on the equity side.
Yeah.
Right. And so
it goes both
don't
ways.
Yeah. I mean, it's a relationship. It's a long-term deal.
And I would say Paladin is a great case study. We got to know Ben at a coffee shop and through a mutual contact. And once we were comfortable with how everybody thought about the world, then he showed us the atrium at Collin Ridge, the deal you're talking about. That was our first acquisition. And then
Central 500.
Central 500 is what we call it now. Yes, central500.com.
Big renovation. Check it out.
But the next deal, I fielded a call from a friend that owned City View Corporate Center. And we didn't say, hey, this is our deal. Let's go buy this office deal right around the corner from Central 500. First call I made was to Ben Appleby, and I said, would you like to own City View Corporate Center along with Central 500, right? True partnership.
Yeah.
And so when Ben finds a deal off of LBJ Freeway, he calls us. And so that's the type of partnership that we have with Paladin, and I expect that will be the partnership going forward with not only them but other groups that we invest with.
But other groups in the same market would make sense for other product types. So you have a different partner for retail, a different one for multifamily, a different one for industrial, et cetera. So that makes a lot of sense.
Yeah, it's been fun.
Yeah.
We've had a good time, and we've closed probably. I mean, with our deal yesterday, we closed $30 million in the first year, and then we've got 3 other deals under contract that'll take us up to just over $200 million in our first kind of
15 months.
15 months.
That's huge.
So it's working. And honestly, when we started this whole thing, when Brock and I were first talking, it was like, who in their right mind would give up part of their upside to partner with these two yahoos? It's like, is there a market for this? And we hit the market, talked to everybody we could talk to, and did a deal or two, and now all of a sudden there's a market for it. People want, especially the person that's off on their own, they're trying to do deals, or they're working for a big company and they want to do their own deal. They need people like us, and they're, and we need them, and it works.
Well, yeah, I mean, because the equation is, do I partner with those guys or do I not do the deal? In a lot of cases. Mm-hmm. So, yeah, and especially if they're new at it and they don't have a long track record like you did at NightFest. Well, if they don't have that track record, they need to build that track record, and
they need
to borrow your credibility, your Moxie, so to speak.
Right, exactly.
So I think it makes sense. And so, I mean, whenever I first heard the name, I was exactly thinking that you're having to bridge the gap between what they lack and what you have, and that's not just cash. They can get cash from a lot of people, but will that cash come if they don't have that credibility, that background?
I have to say, I speaking for me, I personally get excited when I see somebody do something that they didn't think they could do, and we were able to facilitate that for them. It honestly, the money is important. You got to make money. We all have to feed our families. But that, to me, that's not why I'm doing this. I'm doing this to watch eyes open up and people achieve things that are beyond what they thought they could do.
Yeah.
And that just, it gives me goosebumps.
Yeah, and as Casey's alluded to, we closed our first industrial deal yesterday, and we brought on our industrial partner to run an in-house line of MoxieBridge, and partnered with a guy named Travis Ward. And watching him close his first deal yesterday, after it was 134 days after he started at MoxieBridge.
Wow.
And watching him take that leap of faith from a larger company to, again, come join these two yahoos, and watch him execute the business plan like he knew he was capable of was really fun to watch. And now we're under contract on the second industrial deal for him. And
nice.
So, yes, I don't have the same level of resources that Casey has, and I still enjoy watching people win.
It's super fun.
Because there's just that human feel-good element of watching someone achieve success.
Yeah.
And that was fun.
Mm-hmm.
So whenever you guys decided to split out and do this thing on your own, what was the first thing you had to do? I mean, clearly you two had to have a meeting of the minds as to what you do, but how do you crank this thing up?
So there's a lot there probably. I mean, it's anytime you start a company, right, you underestimate the amount of effort it's going to take. You're like, oh, I'm going to start this taco stand, and I'm going to, but you got to you got to do all the legal stuff. You got the bank accounts, you got to the business card, the website, all this different stuff, and it just, it's a lot. But I think, and again, just speaking for me, but it's just a daily, like you wake up and you go in and you make a list and you figure it out, and you just don't stop. You just don't stop.
Yeah.
Right?
Casey always jokes that success happens overnight, right?
Right.
Any, tongue in cheek, because it's hard for me to even answer that question because I think it brings up like PTSD of last April and May.
You don't want
where it's
you don't want to think about it.
Yeah, where are we officing today? Casey's house, his kitchen? Great, let's do it. Are we officing at the Night Vest office? Great, let's do it. Hey, we're at Starbucks at Preston and Royal. Let's do it. I mean, and then you, like he said, you make business cards, you come up with, you buy some shirts and you take a bunch of meetings and then you're like, why do we take that meeting? And you just do it.
So a lot of trial and error, sounds like.
There's no wasted time, in my opinion, when you're starting a company. It's just you're learning how to spend your time, you're learning how to spend your resources, and I'm sure we did a lot of things wrong.
Of course we did.
But I think with hard work, persistence, and treating people like they want to be treated, you end up finding good partners.
You can't stop. You can't stop.
So look, I mean, you guys aren't that far into it. So you're almost a year, coming up on a year soon. But even in that 1 year, what's something that you wish you hadn't done?
Whew.
Kind of put you on the spot.
Yeah. No, it's a good question.
I mean, because if you had to do it over again, what would you not do the second time around?
It's a good question. I think we had a hard time articulating kind of our business plan because it was evolving as we were going, right? And so when you try and explain, like our first deal was I'll call it the townhome development deal in Lakewood, which we're getting ready to tear down a big building next month. But you go out and you're like, okay, the person that we've partnered up with has put their confidence in us to go raise, I think it was $6 million or something, and do the loan and structure the deal and all that. And you go out and you try and raise $6 million, and people see me as an apartment guy.
Yeah.
And so I go out and I'm like, hey, we've done 20 deals together, but I'm doing this townhome deal. And they're like, what are you and trying to articulate our business plan has been a challenge.
Yeah. All right. We'll pick up the rest of this on the other side. We'll have one more break. Sorry.
Thanks, Bob.
All right, we are back talking to Casey Kronbach and Brock Robertson at MoxieBridge. So I'd ask you, what would you want to not do if you had to do this over again? You were talking about just having a better, clearer picture of what your business plan was.
Yeah.
But what did you nail? What did you do really right?
Yeah, I mean, I think we were accurate with the market that there was a demand for what we're trying to provide.
Yeah.
And I don't want to say we got lucky with that, but we got lucky with that.
Well, I mean, you probably saw a gap and you saw that there was the opportunity, but you can have a great idea, but until you actually prove it and do it, it's not a great idea.
Casey alluded to it in the last segment. We didn't stop. Like, we didn't stop and say, wait, what are we doing? Wait, no, let's catch our breath. We just said, we know what we're doing is right, and we're going to keep moving forward. And people are saying no. It's hard to hear no.
Oh, yeah.
Especially for someone like Casey, who's had a lot of investors and done right by them in terms of not only how he treated them, but the returns that he delivered. To hear no had to be a little bit shocking to the system. And then you think, okay, maybe I am just an apartment guy. But going back to keep bringing up the human element, we're incredible creatures. We're very, very smart. We're very, very talented. Not Casey and I, but humans.
Humans in general.
And so, thanks, Brock.
Yeah.
Man, he's got
appreciate
Moxie.
that.
Yeah.
Incredible.
Yeah, you are incredible. But once we were able to curate our message and help people understand that it wasn't about Casey, it wasn't about Brock, it was about Jeff Barron, our townhome partner. It was about Ben Appleby, who's an expert in office space. It was about Travis Ward. When we moved ourselves out of the equation and just said we're sponsoring these gentlemen, they're experts, it became clearer to investors that it wasn't Casey they were leaning on, it was our partner.
Yeah. So how many investors do you have in this 100? I think you said you closed 140 million now.
Yeah.
So how many investors are you having to
How many were in
manage?
the deal we closed yesterday?
There were 34.
34.
Oh.
And we're talking, I mean, my sister-in-law was in that. My mom, you had family. I mean, it's we have obviously a lead kind of investor that kind of drives everything, but it's a nice feeling to see these people that know you, trust you, love you, put their hard-earned money in your deal.
Yeah.
And they believe in you.
What's your minimum investment typically?
Yeah, $5,000.
Really?
And so to clarify,
So I can do this.
yeah, come on, Bob.
Bob, you're in.
But again, another unique part of our business model is when we sign up for a deal, we say the equity's there. And by that, I mean Casey will put the money in the deal. Okay? So we're never going to commit to a deal where Casey couldn't write a check or draw down a line of credit. But our business model wouldn't go very far if we did that on every deal.
Yeah.
So it's not like we're out shopping for $5,000 investors.
Right.
But we're inclusive people. We want people to be in our deals. And so if our neighbor says, I want to be in, but I can only do 5,000, what a shame it would be if I turned him away because he wasn't good enough.
Yeah.
Right. So like that's what we have a lot of investors because we have that spirit of inclusivity.
Yeah.
And come alongside of us even if it's just for $5,000.
But $100,000 would be like really
we would prefer the
minimum,
100.
but yeah.
So it's kind of like if you like the person, maybe 5. If you don't like the person, hey, 500.
Well, I mean, if you put it, we're out every day looking at deals. I mean, we are very active in the marketplace. So I mean, we want to be good partners to everybody, but we know what we're doing, and we're not like putting my grandma in every deal, right?
Yeah. It's got to be appropriate risk to the person's situation and all that. Yeah, I get all that. Mm-hmm. So what's the biggest challenge or risk that you see to your business right now?
First off, I would say interest rates are scary. I mean, the Fed says they're gonna hold them steady this next year, which would be lovely. I think there's a lot of money scared of the stock market that's pouring into real estate, which is compressing cap rates, making things more expensive. That's kind of scary. I mean,
well, I've heard that just when you talk about stock markets, the real estate investment trusts over the last 20 or 30 years have the highest return as a category than any other category, tech or mining or any other segment and sector.
That you're right. You're 100% right. And what's frustrating to me is, let's say we go out and do a deal, okay, and then we return a 20% return to our investors, right? Let's say our investor is a large pension fund and they have an advisor, right? So the advisor takes part of that 20%, and then the pension fund people take part of that. And then by the time you get down to the actual teacher or whoever it is, they're getting a 6% return,
right?
Which is great. I mean, great for them. I mean, but it drives me nuts because, I mean, people should have access directly into real estate without having to pay all those fees.
Yeah. Yeah. And there's a lot of fees, right?
There's a lot of fees.
A lot of fees.
It's ridiculous, actually.
Yeah. I mean, well, anyway, we won't go down that way.
Sorry.
So risks. So interest rates, one of the big risks. What else do you see?
I think just what growth we can continue to sustain, not only in Dallas but in Texas. A lot of the investments being made right now by bigger firms are based on rent growth, are based on continued population growth, are based on continued income growth, which hasn't been moving up at the same level as population. So that's why what we're trying to do is say, okay, what risks are out there? Population or, rent growth. Okay, let's buy a 50% occupied vacant building where the NOI is suppressed and we can bring it up to where it should be. Let's develop a townhome, which isn't dependent on rent growth. It's dependent on people wanting to be in the Lakewood area of Dallas, feeding into Lakewood Elementary. Well, that's pretty recession-proof. That's always going to be a good area. So we're trying to be nimble right now and not be a type of investor that's just continuing to bank on the macro level drivers like population growth, rent growth, income levels continuing to go up.
Employment growth. I mean, in office buildings, you guys have bought office buildings. So, I mean, employment is the big issue there. If you don't have new employment, then people don't need more square footage to occupy. And if they start laying off, they don't even need what they've got.
Right.
So that's always the tough part. So,
and we will never play in the platinum corridor, $40 a square foot rent. I've been very successful in the affordable kind of housing market. I think there's this very similar market with office space. Nice quality office space that's affordable, which is coming hard to find.
Well, I mean, the two investments you mentioned are both on Central Expressway in Plano, so far southeast Plano. And that corridor has not seen the spikes in rents that you're talking about over on the Tollway Platinum Corridor in far west Plano. And so, yeah, it is interesting to see that you can get a nice building for a lot less money over there than if you go.
And we do a big capital improvement program. I mean, it's nice. I mean, we had nice delis and cool bathrooms, and it's not. I mean, it might not be, 121 in the Tollway, right? But it's really, really quality product on the more eastern part of town.
And you don't have to pay tolls to get there. Well, unless you do it on George Bush Turnpike. But on Central, you don't.
Right.
And those office buildings specifically, we want people moving up and down in the world. So if you're tired of paying rents in West Plano or in Richardson, you come north of Bush and get into Plano and pay a lower rent, or you're tired of being in the flex warehouse space off of K Street and you want to be in an actual third floor of an office building, we can still give you an affordable rent. So that's where we're trying to play in that affordable space. Yeah,
no, I think it makes sense. So what are we talked about the big risks, so what are the big opportunities facing your industry?
I hate to keep going first, Brock, sorry. But I think there's a lot of unpent demand, if that's a word?
Pent up demand?
Pent up demand, where you have a lot of quality people that have had a lot of experience working for other companies, and they're ready to go out and do their own deal, but they're scared to take that first step. And I think we provide an excellent platform for them to come into our mix and do deals that they otherwise couldn't do. I think there's a lot of that going on right now.
Interesting.
Yeah.
I think the opportunities is if you just read the headlines, you're probably sitting on the sidelines and you're not playing in the cracks of the market. MoxieBridge is absolutely, right now we're chasing a lot of diverse deals. I'm sure there's people that think we're crazy for buying what we've bought, but we move with conviction, and we're not going to let the headline of the USA Today or the Wall Street Journal keep us from investing capital where we know there's true value to be unlocked. So I think by just continuing to move forward at a steady pace and build our portfolio with good partners, treating good investors right, I think the opportunity is going to be that we didn't stop and do nothing for a couple years, and we've got the cash to go once people stop being so scared of the headlines.
One of the things you just said that I thought was really interesting is the cracks in the market. And I think that's key because in any market, I don't care if it's a great market or a bad market, there's always opportunities. I know in Richardson right now, there's a building that one of my clients was leasing in, and the building went foreclosure.
Mm-hmm.
I'm like, how does a building get into foreclosure in this market? We've had 10 years of an expanding economy. We have low vacancy by Dallas standards anyway, and yet this building goes into foreclosure. It just blows my mind. Yeah. And I think part of it was a very scared owner who wasn't willing to put in any capital to turn it into what it needed to be, keep it a nice building, and everybody just started moving out.
Yeah,
same thing at Atrium at Collin Ridge.
Without knowing too much about that deal specifically, if you take your eye off the ball, it'll hit you in the face. And so I don't care how well located your building is, whether it's multifamily or office or industrial, if you're not doing a good job as an owner and treating your investors the right way, the thing I love about Casey and David at NightVest and what we've continued at MoxieBridge is we report monthly. We're accountable every single month for our actuals to budget. We give a story every single month, and so we have our eye on the ball every single day because we know that's coming every month. Mm-hmm. Certain owners don't report because they don't have to. And you take your eye off the ball, you get comfortable, and then your building goes back to the bank.
And I've heard investors say, if you're a needy investor, I don't want to talk to you. I don't want your money because I don't want to have to report to you all the time. You give me your money, I'll do what I say I'm going to do, and I'll give you your money back at some point. But in the meantime, just don't bother me. And that sounds like that's not.
Who does that?
I know.
Who does? I mean,
a lot of people apparently.
Yeah, well,
a lot of people because those are successful people. But sorry, we're out of time, so we're gonna have to wrap it up. So, listeners, please go to MoxieBridge.com if you want to put your $500 million into an investment. These are your guys. If you want to learn more about the show, please go to thenextlevelshow.com, and you can find us on social media, podcast, YouTube. Just search The Next Level Show. Be back next week with another great guest.
Thanks, Bob.
Thank you, guys.